Morning, good morning, good morning. Welcome to today's morning blast with myself and the magnificent Mr. Michael Brown. It is Tuesday, the 13th of May, all day. As usual, we will be providing a roundup of yesterday, a preview of today, and maybe putting a smile on your face. Before we do, though, I will get the legals out of the way. As usual, nothing discussed in this spaces session constitutes trading or investment advice or infers any kind of endorsement by myself, the Right Honourable Ryan Paisley, or indeed the marvellous Mr. Michael Brown. How are
Good
you?
morning to you, Ryan. Good morning, everyone. May I just stress that there is absolutely nothing whatsoever honourable or right about you.
I have no defence.
I
How are you,
know.
my dear friend? You good?
I'm all right, mate. I'm all right. Yeah, not too bad
Good.
at all, thank you.
That pleases me. So I was just having a swig of my Barocca to get my
Uh,
nutrients in.
oh,
Um,
God, are you on some sort of health kick or something? You're not going to be
well,
turning
let's not get
vegan or anything, are
don't get carried away. It's a liquid diet and just a different form of liquid as opposed to
you?
beer. But anyway, what's been occurring, my dear friend? What's been happening?
Indeed, yes. Let's crack on. Good morning, everybody. It was, unsurprisingly, a very, very positive day yesterday in terms of risk sentiment, with equities surging higher on Wall Street. The S&P 500 closing up by around 3.3%. The Nasdaq 100 adding over 4%. That does, in turn, take the S&P 500 back above the 50, the 100, and the 200-day moving averages. So while we are not quite 20% off the lows, I am very happy to say that we are back in a bull market because, as we've discussed previously on this call, I think those moving averages are a much better gauge of
Yes.
momentum rather than some arbitrary percentage here
Yeah,
or
that's
there.
that. You know what? That's a very good point, actually. And I know we've raised it in the past, but it's worth flagging for people that don't listen every day or maybe forgotten. Yeah.
Well, where are you, first of all?
Well, this is it, right? This is very much the case. What the fuck you do with your life if you're not listening to me and Michael? But yeah, moving averages. Yeah, me and Michael, we're not a fan of technical analysis, really. Um, but but speaking with some like kind of experience, and again looking at kind of people that we know into 20 years as man and boy and all that stuff, all that bollocks. But moving averages are really something that is keenly watched by professionals and stuff. So if you are looking to kind of have some kind of view on technical analysis, please stop drawing kind of random Fibonacci lines and all that crap, or like kind of Elliott wave theory and all that bollocks. Just stick to the simple moving averages, is my opinion. But then again, this isn't trading advice. But I'll give you one question for you, Mr. Michael Brown.
Go
Whose
on.
stock market do you think it is at the moment?
Well, it's not Biden's, let me put it to you
Ah, there we go.
that way. Oh dear. Actually, it's funny you mentioned the Elliott wave, people, because I'm surprised they didn't see these tariff rollbacks coming. But
Oh, well,
you know,
no, exactly that. I'm sure if we dig deep enough, someone would have predicted it on the third wave of the A wave and yeah, all that
yeah.
bullshit.
Well, I was told that it was a full moon last night, so that must have been what it was. Anyway, that rally in equities, going back to that, it does now take the S&P 500 back to being flat on the year. Of course, we've had an
Whee!
incredibly quiet 4.5 months to get back to that point, but nevertheless, there we are, starting back from zero. Of course, the reason for this positivity in the equity complex and elsewhere was the fallout from the tariff rollbacks that we saw yesterday. Just for those of you at the back of the room who may have been on Mars for the last 24 hours or so, the United States announcing a reduction in tariffs on Chinese goods to 30% from the prior 145%. China lowering their tariffs on US goods to 10% from the prior 125%. Both of these changes effective by the 14th of May, which is, of course, tomorrow, and both of these changes effective for 90 days. As I said, we have seen that positivity really spill over elsewhere as well. A big sell-off across what was a flatter Treasury curve yesterday. The front end leading declines as the 2-year yield rose by 11 basis points back towards 4%. The 10-year rising by 7 basis points, and the 30-year by 5 basis points, testing 4.9% to the upside. That in turn led the dollar to gain ground against pretty much all major peers yesterday. The dollar index up by 1.2%, testing the 102 figure to the upside. Cable losing about 1%, trading down to 131.5. The euro surrendering the 111 handle, and dollar yen trading up towards 149. It is just worth bearing in mind, actually, that all of those moves we have seen a very, very modest reversal in early trade this morning. That is not at all surprising given the scale and speed of the moves that we saw yesterday. It's really no surprise that we are seeing some of that given back as the new
Absolutely.
trading day gets underway. Lastly, in terms of market moves, before we get on to some of the more fundamental catalysts, we did have some weakness coming through in gold, the yellow metal having its worst day since
Gold.
last November, losing about 3% as some of the shine seems to be coming off bullion, at least temporarily. Um, sorry. In terms of trade, just a few other bits and bobs worth noting. In addition to the tariff rollbacks that we saw yesterday, the first thing is, I think we mentioned this yesterday, although these pauses essentially are only officially for 90 days, the market is very much taking 90 days to mean forever. And I think it's probably right to do so, given that at this stage, both sides have shown that they have really no desire and maybe even no ability to stomach the economic pain that an effective trade embargo between the world's two largest economies would
Yeah,
cause.
you know what? Just sorry if I can just interject.
No, 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 go on.
I see the wonderful, the magnificent Angie is listening. Also, Tracy. Hi, Tracy. Hi, Angie.
Very
Just
early start.
myself and Angie, very early for them. Myself and Angie mentioned this quite a few times during our grain market blast. Again, if you're not listening to that, what the fuck are you doing with your life? And we kind of said, again, from probably about 4 weeks ago, but it feels like forever ago, the fact that Trump went so hard on these tariffs, it kind of forces the hand. It's not like if he'd announced say 40% tariffs, we'd probably still be kind of having meetings about them in 3 years' time. But because it went so hard and so drastic with the scale of the tariffs, it does really force deals to come to the table, right? So again, is this the art of the deal, or is this just him slapping his cock on the table and saying, right, sort yourself out? I don't know, but anyway, I think it's one to I think you got to kind of doff your hat in the way it's played, because it saves us 6 months, 18 months of just backwards and forwards and trying to sort out trade deals.
Well, apart from the fact that the US and China are going to continue talks and we're having a 2019 redux and Larry Kudlow is going to be let out of the cupboard shortly, but
don't, can you imagine? Ugh.
Bring
Bring
back
back
Mnuchin,
Mnuchin.
that's what I say. Yeah. Oh God.
Yeah.
Oh no. I'd have to give up this show if I was to go back to the administration. That's the only problem.
Good point. Good point.
Anyway, moving on from that, there were a few other bits and bobs on the trade front yesterday and overnight. Reuters sources reporting that China are likely to make it easier to grant rare earth export permits for US customers following the trade talks over the weekend. I think this was one of the questions you raised yesterday, actually, Ryan.
It was.
Another of those questions was regarding the de minimis tariff exemption. According to Reuters, citing an executive order that has been signed this morning, the United States is to cut the de minimis tariff on Chinese shipments to 54% from 120%, with a minimum flat fee of $100 to remain starting from May the 14th. I'll be completely honest, I haven't had a chance to dig into exactly the specifics behind that. But nonetheless, it does seem that although the de minimis exemption has not been restored in its entirety, the tariffs are lower than they could have been. And lastly, via Bloomberg sources reporting from the Chinese side, China has removed the ban that they put in place on deliveries of Boeing aircraft. Of course, that ban was put in place about a month or so ago, and that has been lifted after the trade truce agreed over the weekend. In terms of other bits and bobs from yesterday, the Wall Street Journal reporting that Apple, they are said to be weighing some price increases for the iPhone in the autumn when they release the latest iteration of the device. Apple apparently will not be attributing this price increase to tariffs, but they have also not determined what new feature or features will be offered in order to explain the price increases. I would say that will go down terribly, but to be honest with you, people want to buy new iPhones, so I doubt it will have much impact whatsoever. We also had plenty of political news out of the United States yesterday. I mentioned this in my note this morning, actually, that I think focus for market participants is going to quite quickly move from trade onto other matters. And one of these other matters is, of course, the, quote, one big beautiful bill that is currently going through Congress in terms of tax and also raising the debt limit. The House GOP released their version of the text of this tax bill yesterday. What are you chuckling about?
I was thinking about like increasing debt ceiling by 4 trillion. That just made me
Oh,
giggle when I started thinking
well,
about
yeah.
it.
I mean, I was going to say that's fiscal conservatism for you, isn't it? Lifting the debt limit by $4 trillion.
I genuinely had to double check. I was like 4 trillion. I was like, genuinely, I remember when 100 million was a lot of money. Now, fucking poke
Mental,
it.
isn't it? Absolutely mental.
Ridiculous.
I'm not going to go through all of the specifics of this
Oh,
tax bill
thank
because it
God for
is
that.
390 odd pages long. So if you've got time in your hands, you can go and look at that yourself. The main takeaways from it, though, were this $4 trillion increase to the debt limit. The bill also did not include the millionaire tax bracket that had been touted that last Thursday Trump wanted, and then on Friday he decided he didn't want any more. It included tax breaks on overtime and on tips through to the end of 2028.
Right,
And
pardon?
it,
Oh, tips. Sorry.
yes, control
Sorry.
yourself, Ryan. The tax bill also creates a tax exempt savings account for children. And that account will be called, equivalent to an ISA here in the UK. And that account will be called, and I quote here, the Money Account for Growth and Advancement account. Would anyone like a guess at what that acronym is?
I missed how it started. I was kind of trying to stop sneezing.
Well,
So
the Money Account for Growth and Advancement stands for the MAGA
oh God,
Investment
yeah, God.
Account. Just when you think that things couldn't get any further beyond parody, there we go. Last but by no means least from me this morning, we have had some jobs data out of the UK about 90 minutes ago. Usual caveats apply. It's not really worth the paper that it's written on, given the shit show that the ONS are at the moment. But nevertheless, according to this data, unemployment rose to 4.5% in the 3 months to March, which is its highest level since the summer of 2021. Overall pay that rose by 5.5% on an annual basis over the same period, down from the 5.6% prior, and also below the 5.7% that the BOE had forecast. And payrolled employment per the HMRC figures that fell by about 30 odd thousand in the month of April, which is the fifth monthly decline in employment out of the last six. Clearly, the UK labour market continuing to weaken at a rather significant pace, but of course, the Bank of England deciding to do absolutely nothing about that at their policy decision last week. But I'm not going to have another rant about them because I've already done that, and I want to keep the blood pressure in check this morning.
Exactly that. Exactly that. Well, thank you very much for that, my dear friend, Mr. Brown. So just some headlines via the always awesome overnight news roundup from our dear friend Zach. If you don't subscribe to this and get it sent to your inbox again for the third time today, what the fuck you doing with your life? No better way to catch up with all the overnight news. It's obviously in our pin tweet, it's on our Substack, etc. But starting off with trade news, as Michael just alluded to, US cuts the China's de minimis tariff to 54% from 120%. That's effective from tomorrow, May the 14th. There's going to be $100 flat fee retained on that. But again, this is all very live. It's all very fluid. The headlines are just coming in. So, by the time you listen to this later on today, it might be changed. China lifts ban on Boeing plane deliveries following US trade truce. China's rare earth
Deliveries are taking off once more.
Oh, behave. China's rare earth exporters seek clarity on US sales amid unclear trade talk outcomes. President Xi at the LATAM Forum, there was a load of headlines from that this morning. Forum says tariffs wars have no winners, criticizes US trade bullying. Interesting one on this. So he's outright criticized US trade bullying, which obviously may not go down too well. We've also seen just before we come on air that Chinese spokespeople from the Politburo, from the government, slamming the fentanyl tariffs, saying that they're just completely unjust. But speaking of which, US Treasury Secretary Present says trade talks with China focusing on rebalancing, not decoupling. Japan's Finance Minister Kato to discuss Forex with US Treasury Secretary at the G7 meeting. US pharmaceutical imports hit 53 billion in March, driven by tariff fears, aka front running. India's proposes levies on US goods in retaliation for steel and aluminium duties. Vietnam has intensified its anti-counterfeit efforts after US tariff threats over piracy hub claims. Speaking of Japan, so it's just off. Well, it's not off topic. It's on Japan. On Vietnam. Sorry. Vietnam, we were kind of saying could be a bit of a winner because people move, manufacturing hub moving out of China. But then we had the tariffs imposed onto Vietnam, and we said, oh, well, hang on, you got to kind of feel sorry for the firms that have moved to Vietnam. Now you're kind of feeling sorry for Vietnam themselves because they not only have they losing the manufacturing shift to Vietnam from China potentially, but they're still being slapped with massive tariffs. So as of right now,
And actually,
go on, sorry.
oh, sorry. Well, I was going to say, and also the other thing is that that unless I've completely missed it, there doesn't actually appear to be much progress on them doing a
No,
trade deal
exactly.
either. I don't think they've
Exactly.
even been mentioned
No,
in the same breath as anything
exactly
else.
that. Exactly that. If there's one loser globally right now, arguably is Vietnam. So want to keep an eye on. If you've got an interest in Dong,
I was going to say, short the dong.
moving on, Ryan. Moving on. Work account. Work account. In macro news, oh god. US-China trade truce fails to prevent economic slowdown. God, we got to grow up. But reduces recession
You
risk.
do.
Forecasters say, yeah, true. In more ways than one. Goldman Sachs raises S&P 500 target to 6,500, citing eased US-China trade tensions. Foreign interest in US jobs plummets, worsening labor shortage in healthcare. Bank of Japan board members urge readiness to hike rates despite US tariff uncertainties. Bank of Japan manager Yoshida expects continued wage and price increases, supports gradual rate hikes. Japan's ruling coalition plans autumn stimulus package with supplementary budget. Chinese stocks slide as trade truce dims hopes for additional stimulus. Nomura upgrades Chinese stocks to overweight, citing US-China trade truce benefits. Brazil's central bank signs a 27.69 billion currency swap deal with China's PBOC. UK consumer spending rises in April despite US tariff uncertainty, boosted by the Easter holiday. In geopolitics, Trump's
That's.
sorry, go on.
I was going to say that's better than the usual excuse. We
Weather.
usually tend to tie retail sales to weather in the UK.
Oh well, look, this is the thing, right? It's been a good couple of weeks, so expect the next retail sales data to reflect it's been sunny. That's
Yeah, and then when
basically
it
how
rains, then we'll get a
yeah,
downside surprise. That's
which
always
kind
the
of
way.
sums up the ONS, right?
Yeah,
Like,
it
they put
really
their hand
does.
out the window and say, "Oh, that must be the reason." Um, Geopolitics. Trump skips Israel on his Middle East trip. There has been some headlines over the last 24, 48 hours that him and Netanyahu have really fallen out. So that'd be one to keep an eye on. This is obviously raising concerns about the US-Israel policy alignment. EU is preparing capital controls and tariffs against Russia if Hungary blocks the sanctions extension. Obviously, this is all to do with, if Russia doesn't hold on the ceasefire, which, let's be honest, doesn't look like they are. The EU is preparing to whack a load of more sanctions onto Russia. In equities, before I hand back to my dear friend Michael, Coinbase obviously took the headlines overnight. I'm sure Cam's going to speak more about this in the crypto blast later on at lunchtime. Coinbase to join the S&P 500, marking a milestone for the digital asset industry. Amazon is partnering with FedEx to deliver large packages. Childish giggling.
Oh, for
Strengthening.
God's sake, right? You
Sorry,
really are being immature, even by your standards here.
sorry. Strengthening logistic ties. Google faces a 12 billion euro fines via the EU, damage claims from price comparison sites over customer losses. NRG Energy acquires LS Power's gas plants for $12 billion, expanding in Texas and the East Coast. Sticking with energy, Constellation Energy and Engie abandoned nearly half of $5 billion gas Texas gas plant projects. So a win for gas plants and a loss for gas plants there. Hertz done it. Reports larger than expected Q1 loss amid fleet reduction and slower bookings. AMC cuts Wednesday movie ticket prices by 50% to boost US theatre attendance. Samsung and SK Hynix raised DRAM prices by double digits amid tariff fears and restocking.
Oh
Chinese
no,
so
what am I going to do?
exactly. I don't know. Chips.
So Tom Talks Cars is crying into his pillow at that news.
Well, or biting it. Oh God, Ryan.
Oh,
Moving on quickly.
fucking hell.
Chinese solar stocks surged on talks of industry-wide output cuts to support prices. And finally, for me, Maturin plans a $1 billion to expand food delivery to Brazil, targeting global growth. Let's hope they deliver on that. And that's it from me. Back to you in the studio.
Very good. Thank you, Ryan. We got through
Thank
that
you.
eventually. Right. In terms of
Wow. Wow.
no, I meant in terms of our immaturity.
Oh, okay. Yeah, all right. Yeah, good save. Good save. Quick
No
moving.
worries. Right, as for today, then, a few bits and bobs on the data docket. At 10 o'clock this morning, we have the latest sentiment surveys out of Germany from the ZEW Institute. The expectations index, that is expected at 11.3, up from a prior minus 14. I have checked, and I don't think Bloomberg have missed a minus off the consensus figure, but you can never be sure with Germany. The current situation index, meanwhile, that's expected at minus 77 from a prior minus 81.2. The main event of the day, though, comes at 1:30 this afternoon, London time, 8:30 this morning on the east coast of the United States. And that is, of course, the April US CPI data. Headline prices seen rising by 0.3% on a month-on-month basis compared to the 0.1% decline that we saw in March. That should keep the annual rate unchanged at 2.4%. For CPI, meanwhile, that is also expected at 0.3% on the month, which should also keep the annual rate unchanged at 2.8%. Very difficult, to be completely honest with you, to see the inflation data being any sort of a game changer for the FOMC. Excuse me. Powell and Co are firmly on hold for the time being, and of course the data is well, there is the potential at least for the data to be significantly skewed by tariffs which are no longer in place.
This is it.
In terms of
So,
market,
sorry, just
oh, go
quickly,
on.
just on that, because we have been mentioning it up until this weekend, that basically any data we're getting is what up until that point was kind of pre-tariff, pre-liberation day, etc. So it's kind of like trying to avoid that data, and we're just getting into the period now where the data would have been impacted by
Well, it's all
tariffs,
changed again.
and they're all coming off. So it's like, so again, you all met that another example of why you feel for the Fed, because good luck making decisions based on what's currently going on. But anyway, sorry.
Yeah. No, absolutely. In terms of market pricing for the Fed, we have seen quite a significant pairing of dovish bets on the rate path after the trade truce that we had yesterday. When I looked earlier on, the market now at just an 8% chance of a 25 basis point cut in June. The next 25 bip cut fully priced for the September meeting, with about 58 basis points of cuts in the curve by the end of the year. As I said, this is not going to be a game changer for the Fed, and to be honest with you, the data could be quite messy anyway. Other than that, it is a relatively subdued day. Of course, Trump is in the Middle East, so do be aware of anything he might say in terms of geopolitics or trade, or frankly anything else that comes to his mind. The earnings docket is pretty barren, at least in terms of notable releases before the open and after the close. And in terms of central bank speakers, no one is due from the Fed, but it has been, well, about 14 hours since we last heard from Austin Goolsbee, so he'll probably be speaking again relatively shortly. In terms of scheduled speakers, though, we are due to hear from the ECB's Knott, Escriva and McLuth, and the BOE Governor Andrew Bailey, along with the Chief Economist Hugh Hill as well. And that is your lot from me for this morning.
Wonderful. Well, thank you very much, Mr. Michael Brown. Also, shout out again and thanks to Zach for providing the overnight news roundup. Again, I can't stress enough what a good resource this is.
He must be due a holiday soon.
Well, it's been a couple of days, so yeah, mate, you're right.
Oh.
But definitely do subscribe to the overnight news roundup. There is no better way to keep up to date with the overnight news headlines that you might miss whilst you were sleeping. Well, I'm assuming you're sleeping, but we'll move on because I've been smutty enough already today. Shout out as well to Angie, obviously, for the grain market blast later on, and Cam from Institutional 5 for the crypto blast later on. But that's it for now from me and the magnificent Michael Brown. Whatever you're doing today, stay safe, keep it tight, stay out of trouble, don't do anything I wouldn't do, and we'll see you all tomorrow. Goodbye.
Bye for now.